I'm Charlotte McLeod with the Investing News Network, and here today with me is Mercenary Geologist Mickey Fulp. Thanks so much for being here today.
Thanks a lot, Charlotte, once again.
Yes, and we're here today at the Precious Metals Summit in Beaver Creek. Since it's focused on precious metals, let's start by talking about gold. We spoke last about a month and a half ago at the Sprott event, and since then we've seen gold make a big move. What would you say has been the main driver or drivers?
Well, another big move. So this move up from 1270 in the third week of May to over $1,500 or thereabouts, got as high as 1550 last week, is unprecedented. We've never seen this happen during this period of time. And we have gold charts date back to 1970 on an annual basis, and this is unprecedented. This continuous move up, it's really gone exponential. A whole variety of reasons. Lower interest rates worldwide, negative interest rates in Europe, inverted yield curve in the U.S., so big part of it's interest rates, central bank buying, ETF demand by retail investors, geopolitical risk in the world. You know, this thing with Hong Kong and China is quite concerning to me, and that's weighed on the market. Iran, Venezuelan sanctions, UK, Brexit, EU debacle. It's all kind of added up, and gold's gone on a flyer here. It's pretty surprising, actually, because this, when we were talking in Sprott, I think I said, well, it looks like it's established a strong base at at or above 1400. Now you can make the case that we moved up another $100, and is it going to stick here? And I can't answer that, but
That was going to be the next question. Do you expect to continue, and what would you expect to see? What path would you expect to see gold take?
well, it's gone up too high too fast.
Right.
This chart from the third week of May 21st to be exact, is exponential stock chart, and financial instruments of any kind do not go exponential without having generally go parabolic. So what we want to see is a more orderly step, two steps forward, one step back sort of market where we establish these periodic resistance. Gold has no resistance really, all the way down to 1430. So it's a bit precarious right now, I think.
So what would you say are the risk factors for gold right now? What could knock it down from
Well, we saw it get knocked down last week, and it got knocked down on Thursday after it hit another new 6.5-year high. On Wednesday at 1552 an ounce intraday, and it got knocked down Thursday and Friday. First on news that Trump and China have decided they're going to have some more trade talks. So that knocked half of that gain off. And then Friday morning, early Friday afternoon, New York time, there were 3 million ounce paper sales of gold. So someone was either trying to knock the price down, or they were taking profits, or they were short. Who knows? But anyway, that knocked it down to below 1400, or below 1500, pardon me. I don't know what it's trading at now, but we really need for it to hold at 1500. Otherwise, it's going to take a leg down, and the next resistance really is at 1430. That was the last time it took a pause.
So there's many factors driving gold, many that could push it down and are doing that as we go up. So it's kind of a precarious rise at this point, right?
Oh, I think so. It's just exponential, and that's not what you want to see in an orderly market. So there's some concern here. I think it'd be really healthy on the market if it would have a correction. Even if it went back to 1430, you don't want it to go below that, but it needs to test some lower levels here before it goes on its next run up. Now there are some mitigating factors, like the banks all over the world are long gold right now. The big banks, the big finance, the finance community worldwide is for the most part bullish on gold. So that means they're long gold. So they talk their own books. Don't think they don't. So from that point of view, that's another factor that leads us to believe or think that this could be for real.
Okay. Have we seen a reaction to gold's movement in gold stocks at this point?
Well, define gold stocks. The gold miners
Yeah.
had nice moves up.
Hmm.
Some a select group or a few of the advanced explorers slash developers have had moves up, and other stocks have been flat. So it really hasn't permeated all the way to through the junior resource sector, which most of the people at the Beaver Creek Summit.
Yeah.
This is an exploration convention. There are less miners here than you'll see at some other conventions this time of year. But we're looking at exploration stories here, and for the greater majority of those, really haven't seen bullish stock prices yet. So our little nano cap into the market, I think people really, this 1,500 becomes very psychological. It's a nice round number. It's halfway to 2,000. So the crazy bullish people would say it's going to 2,000, and in a quick fashion, they go, well, it's gone up this much. What's going to stop it? Well, there are lots of factors that'll stop it, but it really is. It's at all-time highs in the majority of the world's currencies. It's just the U.S. dollar is really strong right now.
To see that share price movement percolate down to these smaller companies, do you think we would need a higher price or a more consolidated price like you were talking about, or something else?
Well, I would hope, and it's just a hope, and I don't have any real evidence for it. I would hope that it will stick around 1,500 or above 1,500, and I think at some point that becomes, if it has some longevity at 1,500 and above, then that implies that the market is on a new paradigm, if you will, and the juniors should prosper. I think right now it just seems a bit tenuous.
Okay. Where's silver in all of this? How do you feel about silver's movement and potential prospects moving forward?
Silver jumped about 80 cents on Wednesday, and it gave it all back by the end of Friday. So, silver is catching up a bit, but I'm not a silver bull, and I'm not really convinced of the long-term viability of a higher silver price. Certainly the gold-silver ratio is out of whack. Silver should go up faster than gold. We've seen that during the later stages of this rising gold market, but I still think once it hits $20, a bunch of hoarders are going to come in and knock it right back down. So for me, that $20 price of silver is more like a psychological barrier. So if we were to see silver go to 20, and let's say gold stayed at 1,500, that's still a ratio of 75 to 1. That's still way above the mean and the median for silver, gold to silver, which is 55. So silver's got a long ways to go, but I think $20 is a real impediment to get there and stick at this stage.
Last question. Where do you think we're at in the current commodities market cycle?
Well, that's a really difficult question because, a lot of people in the world now that think that the world's economy is slowing and we're on the verge of an economic recession. That may be true for the rest of the world. I'm not sure if that's true for the U.S. right now. The U.S. continues to percolate along. The commodities cycle is being driven right now by geopolitics. So you've got the trade tariff talks. When they're on, gold goes down, copper goes up. When they're off, copper goes down, gold goes up. So which commodity do you want to talk about?
Exactly.
There's a bifurcation in the market between the precious metals, specifically gold. The other ones are behaving quite a rarity the way they're behaving, and the base metal complex, which is not going to go anywhere. I'm convinced until the Chinese realize that they need the U.S. a lot more than we need them, and I think there's a lot of cracks in the Chinese economy right now. We have no idea if their GDPs are real. We tend to think not. This Hong Kong Chinese problem is scary.
Mm-hmm.
I think that could become a catalyst that could drive some things economically that we don't want to see happen. So we would hope that China backs off, because there's a group of people in Hong Kong that seem bound and determined to throw off communist rule. We'll see how that works out.
Yeah, we'll see. Just finishing up and asking about the trade war, do you have any ideas or thoughts on where we could be headed? I know it's very hard to predict. It
I
keeps
think
changing.
the Chinese are trying to wait us out and figure out if Trump's going to get elected, but re-elected. If they think he's going to be re-elected, they'll come on board really quickly. If they think he's going to get beat, they'll wait for the next president of the United States.
Okay, very interesting. I think we'll wrap it up there for now. Thank you so much, as always.
Thanks a lot, Charlotte.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Mercenary Geologist Mickey Fulp.